Good morning, everybody, and afternoon and evening, depending on where you're at. We're going to talk a little bit about what's going on in the Bitcoin market. Breaking news. Piggybacking off of the explosive video on Ethereum and the crypto and gold world that we gave you earlier today. If we take a quick look at the Bitcoin market, we'll see that it had a pretty big fall today. Very expected, but a big fall nonetheless. We'll zoom out here, flatten it out so you can take a look at what we got going on here. We'll go to the daily time frame. This is the daily time frame. Get our little pointer out here. And you can see when we started off way down here with our big bull market, we had a parabolic run up. And the big thing we want to talk about here today with you is after we've had this big blow off top and then this upwards and sideways consolidation with falling volume. If you notice at the bottom of the screen by where it says March 21st, you notice just to the left of that peaking volume right there with the peaking price that peaked out right here. And since this point, you can see the green and then the red volume noticeably declined, at least 60% volume decline. And what that indicates with an upward rising wedge and a tightening range, as you can see the movement, what I mean by tightening is the movement, and each move is smaller than the next and gets closer and closer to each other as it's making its move. That's what I mean by tightening of the range. And you can see it's doing that. Once you got up here, after a mini pullback here, at the time was probably about 15%, and then the final push up that made our top of where the rising wedge really started. Then you've seen top 2, 3, 4, 5. But as you're tightening up there in the falling volume, it's signaling a pattern reversal. And we did, if we zoom into here, we'll get the pointer out. If we zoom in, you can see, get my pointer back over here. We did break out of that falling wedge right here. And we fell about 26% from the top. Then last week, you noticed a big reversal, right? Well, that big reversal last week was kind of a relief rally, the opposite of when you're pushing parabolically up. You have a relief sell-off down before you make your next move up, right? You guys have all seen that. That's what's happening right now. So you've had a pretty big push from, if you remember last Sunday, you had a dump, right? You had about a $2,500 loss in Bitcoin within a matter of an hour. And everyone started getting bearish. Stop losses started getting triggered. Limit orders started getting taken out, right? And when that happens, the price can flash crash like it did. But right after all the margin, which most of those limit orders that get triggered and it causes a flash crash like that, they're usually on margin. So that margin gets wiped right off the trading sites. Coinbase, Bybit, BitMEX, whatever trading you're using, Binance, Bitfinex, that liquidity just gets wiped right off the exchanges because it was really never there. They were leveraging up. They were borrowing money to buy their stock because it was going up. It seems good when it's going up. Well, as soon as that local area of that high concentrated margin starts getting called and it gets zapped out, well, buyers are sitting at those levels too, and it gets bought back up and you get a relief rally up, also known as a bull trap. And that's what you got going on right now. And everyone, we've made some good gains. You've made some good gains. A lot of people have made some good gains, but just be cautious of that. If you've entered in a position in the last 24, 48 hours, that you could be looking at, my first target is down, if you look at the right side towards the bottom, 43,024.94. That's my downward target. And you might be asking, well, how'd you come up with that? How'd you come up with that? Well, I came up with that by just following the pattern we've broken out of, right? The upwards and our rising wedge, when we broke out of that, the target is the bottom of the wedge. And the bottom of the wedge is right about that blue line, 43,000. Now, I think we may have entered into a bear market, but that's to be determined. And we have to watch that on the daily time frame to see how far we came off and see if we don't make new highs. But I expect at least another 8,000 to 9,000 point drop because we got to fulfill that pattern, the rising wedge we broke out of. And that was a monthly pattern. You know, that wasn't a minute pattern or a weekly pattern. That's a monthly pattern we broke out of. And when we broke out of that, when we initially broke out of that 2 Sundays ago or 3 Sundays ago now, if we zoom in, you can see where we broke out of it. That blue line. I'll make it bigger so you can see the blue line that I'm talking about, right? Just give me a second here. Just got off the phone. So we're going to make this a little bit bigger. That blue line right there, that was our multi-month lower support line in our rising wedge. And here we'll make that bigger. This was our upper support up there, right? We'll zoom out so you can get a bigger, see that? That's a it started in February. So February, March, and April. 3-month rising wedge, which that's typical for 3 months. But if we zoom in, you'll notice the whole time we were going up, we hit the upper support, right, once. Then we hit lower support once, right? You guys can see that. I'll get my pointer back out here. We got our lower support, you know. Then we got our lower support, and that retested the first time on our first rejection in this rising wedge. Let me pull out my pointing tool. But when it came down and touched the lower support line the first time, down right there by where you see that dot, there we go, sorry about that, you can see when we touched the first time up here in the rising wedge, we got rejected. And you notice the volume, the peak back in the volume was there, and this is the daily time frame. And you notice how the volume drastically declined and then turned to selling, and we came down to where I think our next target is at 43,024, but we got strong buyers there, and we had a huge bounce back up to our second high, which that's confirming our upper resistance line in our rising wedge with falling volume, you know, and with falling volume after that big of a move up, and we have overhead resistance, you know, up top of you, we're going to get rejected. We traded sideways for a little while, a week or two, then crashed back down, and we stopped at our lower support line in our rising wedge for our second touch of that. So now we have 2 touches at the top, had our second touch right here. Now we're going to, that confirms it, right? Then we come up in our range, like I kept saying when we were in the daily time frame or the weekly time frame, zoomed out, the tightening range. Notice how tight this gets. And then really tight on the last time up, third. It didn't quite make it up there, but it got close enough, got rejected. And then notice how we initially stopped, we'll zoom in, right when we were about to break out of this rising wedge. Notice how we came down and blew by it, but immediately got bought back up in the daily candle. So during the day, we had an immediate pullback after what most likely happened there was a bunch of margin got liquidated out of the market because they were levered up and they were gambling. They were bullish, gambling 2, 3, 10, 20x leverage, right? And they got liquidated. Well, as soon as, again, that liquidity gets drawn out of there, you have buyers, and it immediately buys it back up if you have limit orders in there. If you're using Bybit or Binance or BigFinex, you know, those are good exchanges that have limit orders, and it really fucking saves the day if you're trying to catch that. But it immediately got bought back. It comes right up against the resistance now because we broke this lower support line decisively, came back up, and immediately got rejected now. Became the long-term support, the 3-month support became resistance, just that quick. And then just like you usually do when you see a big wick down there, the next few candles will trail off and go lower. But you see we broke decisively by about 15 to 18%. As soon as we broke through that lower support line, we crashed, right? But we hit some support from the prior trading on its way up. Traded around there for a few days. We'll pull our little pointer up. Traded around here for a few days, and we had a few areas. You see the upper green line and then the horizontal green line where they met. You had some long-term support from the trading up, right? So you traded off that for a few days and then crash, and then had the quick reversal and traded in a smaller, we'll go to the 4-hour time frame. You pretty much did the same thing you did in the daily time frame, but in the 4-hour time frame and the smaller time frame, right? You started lower volume after a big move up, a sideways and up consolidation that got tighter and tighter. We'll even zoom in closer to the 2-hour time frame, because the shorter the time frame, the more data points you need to sort of see what's going on. And you can see how we hugged the upper support line in a tightening range on the way up, came down to the lower support line, a thick green line running from bottom left to top right. And as soon as we crossed that, we traded sideways, hit it as resistance real quick, right? I'll show you what I'm talking about. Hit it as resistance real quick right there, and then crash now after. And I think we're going all the way down to 51,000 quick. Trade a little bit on it. Then if we're going to go down more, you can always use your lines that you drew out from a previous pattern, right? Like this line just not randomly drawn, the red line down. That was overhead resistance after you had your first big crash a couple Sundays ago. And you came down and crashed below it and got caught up on resistance a few times as lower resistance now. As it's coming up resistance, rejected, rejected, rejected. Finally crashes. Comes back up, hits it, briefly stops, blows by it. Now on your way down, your next obvious target's here. This green line, dance around it, maybe pop back up. And then this green line right here that's trending upwards would become your resistance point now, which would be a likely place that would get rejected around 54,000 if we bounce off the 51,600 level, right? You kind of seen how that's playing out. It's not that difficult to understand if you're being shown it, you know what I mean? It's very, very simple to understand. And then so you would think you'd come back, and if you get a good bounce, this would be a likely sell point. But I think you're going to, after briefly dancing around here, I think you're going to come back down to it. It could take a week or two, and we got to draw this line out. Not change it, but just draw it out farther into the future, right? But I think that's going to be a very likely a spot where you would come get support at 50,000, right? So that's where I think you're going to come down to next on your way down. And that's kind of how you got to play it, you know what I mean? And if you look at what's going on long term with crypto, not just talking about the daily chart, we like to look long term. I know we got a lot of day traders and weekly traders. We'll start giving you buy, sells, and sell signals. Right now, obviously, it's a sell signal. We put the Ethereum video out. But if you got any other coins that you're in and want us to give you buy and sell signals, we'll freely do that. Just comment below the link, right?